Hello, Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's June 15th, and we're in the middle of the month, and there's lots going on in the marketplace. We're going to be looking at the Fibonacci sequence. If you're not familiar with Fibonacci, I think you'll enjoy seeing what we're coming up with and why the markets maybe stopped where they did yesterday. And we're also going to be looking at gold and crude oil. Let's start with crude oil. You can see that we have had just the last couple of days some pullback in crude oil. This is July crude oil that we're looking at. You can see how we've suddenly come down from the highs that were just over the $50 level, almost $52. We got very close to our target, and we sort of had 1, 2, 3, 4, 5, 6 days down. Probably enough, but the important thing is this number here, right here. We exited our long position at 49.44. That was our position out, our exit position out. And again, the market's at 47.80, quite a bit lower. We are also below the 50 level, which is not a good sign. And we may see some more backing and filling before this market resumes its upward trend. But certainly for the moment, the momentum has gone out of this market. You have a mixed picture. The weekly is up, which is a good sign. The daily is down, which is a bad sign. So again, this is a sideline position in crude oil. So let's move on. Okay, we're looking at the Dow Jones, the 30 industrials. We look at this all the time, and you can see what I want to share with you today is this. So we're going to take our Fibonacci tool, which is right here. If you've never used it, get used to using it. It's a very, very powerful and easy to use tool, and it can help you enormously. So you click once here, and you drag from the highs to the lows. So what you're looking for is a retracement between those 2 points. And let's get a bit closer in on this. You can see that the retracement level from the highs here, a little over 18,020 to the lows, the retracement level comes at 61.8% at 17,636. Notice where the market rallied from and jumped up from. The 61.8% Fibonacci retracement level is a very important level in stocks and in many futures markets as well as, and including Forex. So using this tool, that's why we built it into Market Club, so you can use it. It's easy to use. Get used to looking for retracements because they can help you get into markets that are trending very strongly. I strongly recommend you also take a look at our video lesson on Fibonacci. I think you'll find it very helpful and very useful in the future. So you can see today we are moving up from this Fibonacci area, and I expect that we're going to move further up until everyone starts getting concerned about the Brexit or Great Britain's staying in or leaving the EU. Hopefully, I hope they stay out of it. I don't think they should be in the EU to begin with. I think it's a big, big mistake. So, but that's just my personal view because I am British by birth and grew up there, and I do believe that countries should be in charge of their own destiny. So let's move on to our next market. This is the Dow we just looked at. This is the Nasdaq, and we're going to use the same Fibonacci tool again. So click on the Fibonacci tool here. Go to the very highs. That's the high there. Drag to the very low period right here. And you can see this got to the 50%, a little below the 50%, between the 50 and the 61.8%, and then bounced up again. We've seen a turn in the RSI. However, it's still below the 50 level, which is not good. However, both of our monthly and weekly are still positive, indicating that the major trend is still up, but it's more of a trading range, and I think that's what you want to be concerned about. So this bounce from the Fibonacci level, I think, is probably going to peter out as concerns of Brexit gets more and more to the forefront of traders' minds. This is the S&P cash. We're going to do the same exercise here. We're going to click on the Fibonacci tool. We're going to go from the highs to the lows, and you can see that, again, made the turn a little over 2,070 was the Fibonacci retracement. We're at 2,083. So we picked up about 13 points from the lows of where the Fibonacci should have come in. But why did it stop there? To be totally honest with you, I don't know. I'm not a master mathematician, and I don't think anybody really knows. But this has been going on for so long in the markets that it actually has become its own law. So Fibonacci retracements, 38.2, 50%, and 61.8% tend to be very good areas to look at. In a strong market, you tend to get 50% pullbacks, or even 38.2% because the trend is very strong. In a really kind of choppy market like we're in now, you can get to the 61.8%. But watch the video, I think you'll find it very useful. Last market we're looking at is the gold market. I'll take the Fibonacci tool off there, but again, you've had a nice move up. It's kind of stopped where we expected it to stop, around the 1290 area. We said, well, this is where the resistance was in our work, and I think that's going to be a definite key level right here. You can see that's where the resistance hit before. I think we'll see some back end filling. Eventually, I think we'll go over the 1300 level, but you want to be long when this market goes over there. It's going to be a very, very strong signal. Now, our last signal was a daily signal to get long, and excuse me, a weekly signal right here, and that came in at 1279. The market's at 1285. So again, if it pulls back and you have an opportunity to buy at 1279, pick it up and use a daily as an exit stop. And that daily should come in today, should come in somewhere around this level right here. If it goes below this level, then we're clearly wrong, but just watch it very carefully. But again, we are longer term bullish on gold. We think maybe the Brexit, you saw the financial markets, we talked about them yesterday, Citibank, American Express, all these things are going down. The trend is down in those markets, and it's down for a reason. I'm not sure what the reasons are exactly, but enough people are looking at gold, including George Soros. Remember, we talked about George Soros. Did he get it right? He wants to short stocks and get long gold. So far, he's on the winning track. Hey, I'm Adam Hewison. Thanks for stopping by. Thanks for watching this video. And be sure, if you want to leave a comment or you have a question, feel free to do so. Every success